Hi guys, in this video I will show you what trend lines are, how to draw them, what they tell you, and how you can use them for your trading strategy. So stay tuned. We will start right away. Let's first talk about what trend lines are. They are easy recognizable lines that traders draw on charts to connect swing highs and lows, which gives the trader a clearer picture of the ongoing trend. So let's take a look on this chart. We're on the Euro-US dollar in the 1-day time frame. And we have a clear downtrend here because it's making lower lows and lower highs, making its way down. Now let's start and draw the trend lines. Since we're in an ongoing downtrend, we draw the line to connect the swing highs. You see it's not touching every swing high at the same point. Here it's touching with the body. Here it's only touching with the wick, but it's totally fine. It doesn't even have to touch every single swing high. If there's a swing high which is not touching the trend line, that's also perfectly fine. Now we will draw a trend line at the bottom of the trend. The bottom line is not that important in a downtrend like the upper line. I will show you in a second. But as you can see, it's touching here, it's going through here, and touching here again. But this is totally fine. It's building a channel for this downtrend. And we'll take the upper trend line now and pull it forward. And here you can see where it breaks through the upper trend line. This means that the trend is breaking here. And if you pay close attention, you can see in this downward movements, there's a strong downwards movement, and then it goes back to the upper line, then there's strong downwards movement again. And here, there's building kind of a trend in the trend. You see here it's only one direction without a swing to the upper line. Here it touches the upper line, and then it's building a swing. This is the first indication, besides that it's breaking through, that there is a trend reversal. But you wouldn't take a trade right away just because it breaks through this line. It takes some more arguments for confirmation before you should enter a trade. We will talk about these additional arguments to confirm the trend reversal first before we enter a trade. But I want to show you first that you don't always have an ideal trend line like you have here. You always need at least 2 touches to have a trend line. And it's a general trading rule that after 5 strong trending waves, you should take caution. Because 5 is the number where the experience says that in average, after 5 strong waves, a trend reversal is likely to take place. If you look here, we have 1, 2, 3, 4, 5 downwards movements, and then we have a trend reversal. So this is a really good example, but it of course doesn't always take place after exactly 5 periods. So it's just a general rule where you should be really cautious. And if it's already the 5th swing or already the 6th, you really should be cautious and maybe stop placing orders. Now let's move into a second chart. Here the Great British Pound US dollar, also the 1-day chart. And let's draw some trend lines here. Maybe you see right away that we don't have this ideal trend line like we had in the chart before. That's the reason why I wanted to show you this, because it's not always like the theory book says or like many coaches show in their theory. In reality, it's often not that perfect. But you see, it's still touching 2 times, but it's also perfectly fine that not every swing is touching the trend line. So let's draw the trend line on the bottom as well. And you see it's touching at 2 points. It's also not ideal, but it's okay. You have your trading channel here in your downtrend, and you see where the swings are touching. You also see a false breakout here. There's coming high volatility into the market, big momentum down, but with the really big wick, you also see that the bolts were taking over pretty fast and the momentum upwards was gaining as well. Then it moved back into the channel, but you also see there are swings developing now. And this could also, like we learned just in the other chart, be an indication for possible reversal. But let's first make our upper trend line a little longer. And you see, at this point, it's crossing the trend line and leaving the formation of the downtrend. So you have two criteria here. It's building higher highs and higher lows, and also leaving the trend line from your downtrend. So it's starting to break out a new trend here. But again, this doesn't mean that we're taking a long trade right away just because it's crossing the trend line right at this point. Before placing order, we'll do some more analysis first. So let's find a significant support and resistance level. At this level, we have support and resistance at the same time, which makes it a strong level. So besides crossing the trend line and leaving the downtrend, we now have a second argument, the support and resistance level, where we have to wait until it's crossing this resistance. But it's still a level where, for example, like a false breakout here could happen and the market returns back to the downtrend. But here it's crossing through and also leaving the resistance level. So if you want to trade trend reversals, you could look for in trade to entry over these two significant arguments for a trend reversal. So the market is moving upwards and you see weakness coming into the market here. You have your strong support and resistance level over here. And you can look for an entry here. And again, in reality, it doesn't have to come all the way down to the support and resistance level, like it does in theory. In reality, it doesn't always work out that way. So this is definitely enough. The support and resistance level is on that range and it's finding support here. And if you zoom in, you also find a candlestick pattern here, the bullish engulfing candlesticks pattern, which could be an entry for you to go long at this point. And for those who have trouble deciding on an entry, you could also say, okay, let's have a look at the Heikin Ashi candles. And here, it's a lot easier to see the clear trends. The upwards movement and the downwards movement appear a lot clearer. As you can see, the long candles, the green ones, have almost no wicks at the bottom, and the red candles have almost no wicks at the top. And it helps you here to see that there's weakness coming into the market, and then the color of the Heikin Ashi candles turns from red to green. And this is your confirmation where you could put your entry. It's just a tool that maybe can help you to exactly define where you put your entry. Of course, it can also help you if you do not trend reversal trading, if you do trend trading. So it helps you to find an entry at this point where the price action hits the upper trend line to find an entry short. But for trend trading of this kind, I would always recommend to find your possible reversals within the trend at the higher time frame, like 1 day here, and to find an exact entry, you go a time frame or two smaller. Multi-time frame trading is also a really powerful tool in your toolbox, but we will talk about that deeper in a different video. For this video, this is the end, and I hope you learned a lot about trend trading with trend lines. If you have any questions or suggestions, do not hesitate to contact me. And if you like this content, please leave me a thumb up and don't forget to subscribe to my channel for more interesting videos to come up soon. See you there!